Good morning, my name is Richard Perry and this is the ETX Capital Morning Market Bite. Asian equity markets fell to 1 month low early this morning as the premise of higher borrowing costs in the US and slower global economic growth perturbed riskier assets. MSCI's broadest equity index of Asia-Pacific shares outside of Japan fell 1%. The Kospi, South Korea's equity market, dropped 1.6%, and the Hong Kong's Hang Seng index also fell 1.2% as Chinese consumer inflation data moderated more than expected, adding additional deflationary pressure in the world's second largest economy. Over in Japan, the Nikkei 225 fell 0.3% from a 2.5-month high hit on Monday. The strong US jobs data published on Friday of 271,000 jobs created had changed investors' perception that the Federal Reserve may raise interest rates at its December meeting. Money market futures pricing in the likelihood of a rate hike next month at more than 70%, with the 2-year Treasury yield in the US hitting a 5.5-year high of 0.958% on Friday, pricing in the expectation of an interest rate rise. Higher US interest rates make parking funds in the dollar more attractive, especially with divergent monetary policy across the pond in Europe, with negative interest rates on the horizon, potentially on the horizon. In the FX markets, such a divergent policy outlook helped to cap the euro and lift the dollar, although the dollar slipped slightly on profit-taking after making sharp gains on Friday. The dollar index pulled back to 99.075 from Friday's 7-month high of 99.345. The greenback against the yen fell from highs from 123.17 from a 2-month high of 123.60 set on Monday. In addition, the euro ticked up to $1.07 from Friday's 2.5-month low. The euro remains weak as Portuguese government bond yields hit 4-month high after the leftist political party reached an agreement on forming an alternative government to try and oust the centre-right. In the commodity markets, they have been under pressure recently due to the recent strength of the US dollar on the ever-increasing expectations of a rate rise in December. Gold traded at $1,092 spot 20 per ounce, near its 3-month low of $1,085 per ounce, while silver also fell to a 1-month low of $14.48 cents on Monday. Moreover, copper slid to a 6-week low of $4,940 per tonne, also hit by concerns of demand from China. In the energy markets, crude oil showed losses for a 4th straight day on Monday of news of a fresh build-up of inventories. Brent traded at $47.38 a barrel, having slipped more than 7% from last week's highs. In the UK equity markets, Vodafone reported a better than expected growth in second quarter revenue, helping it return to earnings growth for the first half and nudged its expectations for the year towards the top of its guidance. The shares are currently trading at 223.25 pence, up 4.3% on the day thus far. On the data front, yet to be released is quite light, with the US import and export prices due to be released at 1:30. In addition, at 6 p.m. in the US, there will be a 10-year bond auction. Currently, the FTSE is trading at 62.79, down 30 points on the day, and the DAX is trading lower at 21 points at 10,803. Many thanks.